Well, the US has done it once again, this time raising interest rates to 5 to 5.25%. This week, Australia also raised their interest rates to 3.85%. So you can bet your bottom dollar the next bearish narrative is going to be a Fed pivot. We're starting to hear rumors of the Fed pausing their interest rate hikes. So this will bring on more bearishness and just prolong the narrative to the second half of 2023. Now, if you have been a subscriber, which I suggest you do, hitting that button down below and the like button, we have a ton of content on the macro cycle, Bitcoin, cryptos, and the real estate cycle, which is essentially the macro cycle. This is your only place on the internet that studies the past to forecast the future in amongst all of the noise, bringing together everything in the market, not just stocks, not just crypto, and not just real estate, but all of the cycles together. While you're clicking that like button with the fireworks, make sure you check out the links in the top of the video description for our TIA membership. This is where you can learn how to prepare yourself and how to navigate the markets as we continue to head up before a very major collapse in the coming years. So going back to what's happened overnight with the interest rate rises, I wanted to lay this out on a chart so we can get a clear picture of what is going on, some real objective data so that we can avoid the noise moving forward and learn how to navigate the markets and understand what is potentially coming next for these markets. So if you hadn't heard the noise, or the news we should say, basically interest rates have gone up, but it looks like the Fed is potentially signaling a potential end to the hikes. So we have the Fed raises rates, opens door to pause in the tightening cycle. Again and again and again, we hear this, and the majority of commentators or analysts will just continue to play on this as it's a good topic to raise fear in the markets. But if we go back just a minute here to some previous posts I had on Twitter, just looking back to December of 2022, around the bottoms when there was far more fear than there is now, I had a few unpopular opinions here as I bring the screen up to be a little bigger. First, S&P 500 is bottoming. Remember what price this was at. This was in December through these areas here when the S&P was at 3,800 before the banking crisis low. The other thing we looked at was Europe will not freeze this winter. This was a huge fear that was sometime early, mid 2022. These sort of things come and go. So I want to make emphasis to this as to how the dumb money continues to get trapped by those in the know. Smart money, long-term investors, anything like that. The dumb money always gets trapped by a lot of these fearful calls, and you see it all across the internet. The other thing here is real estate is not going to crash in 2023. It didn't crash in 2022, didn't crash in almost the first half of 2023, and we're seeing signs in some areas of real estate actually creeping up again. It did have to have a pullback. That must happen in any market. It's a healthy correction because we went up a huge percentage amounts during 2021 and late stage of 2020. So it has to have a correction, but we have not seen any sort of crash whatsoever across the board. Second half of 2022, so last year, and the first half, which we're currently now, are buying opportunities. This was said, remember, on the 22nd of December. So where were we? We were all the way back here at around $16,500 for BTC. And the middle of December here, we were at about 3,900 points on the S&P 500. Bitcoin is bottoming. So I called that then. And then most crypto are terrible DCA investments. We know them as terrible DCA investments. That's an easy one because over the long term, 5-10 years, 99.99% of them aren't going to make it. That's an easy one. I'll give it to anyone that also gets that. But Bitcoin is bottoming. Remember all the people that were saying this had to go much, much lower. Sure, it could have went a little lower, but basically this was the bottoming pattern all the way back from June, which the interest rates have also shown us, all the fear around those interest rates. So what I want to look at next is how much money was left on the table. More so, let's have a look at how much money you could have made just looking at some simple interest rate announcement news. So March was the first time that the interest rates were increased. Then we had the May increase, the June, July, September, November, December, February, March, and again in May. So this happens every 6 weeks in the US. For us in Australia, it happens once a month, the first Tuesday of every month. So this is what has played out. So these are the dates here that we're going to use for the S&P and Bitcoin. If you can't tell already, the red arrows are the interest rate announcement days. And you can start to see already in this pattern that had we just bought on those announcements, it's volatile, but the fear in the market, if you remember back to that, there is a lot of fear in the market around these decisions that said the market should have collapsed because no one can afford their properties. People are going to be left homeless. They're not going to be able to afford to pay their bills. It's all these narratives that we have to remember, which is why I always come back to remember to study the past, remember that, and then you can start to forecast the future because more or less, even the macro analysts in big companies, most of us are pretty well dumb. We don't study the past and don't understand what is coming up. So these are the dates that we had the interest rate announcements on. Now look at this in terms of the news as well. Each of these dates that we can see here from March to May to June, July, September, and so on, they weren't at the exact low. We don't need them to be at the exact low, but they have been pretty good opportunities if we were just looking at buying on those dates. What does that look like in terms of numbers? I think this is pretty staggering itself. March, a rough figure here at around 42. So I'm rounding it up, 4,200 points. May was at 4,100 points. So basically on the 50% level. Then we go to June, 3,700. We go to July, 39. We go to September, 38. This is at the missed opportunity line here. Then we take a look at October. So right in here, just before we had that next little dip down into November, that was another opportunity at 3,800 points. Moving forward to December, around 4,000 here. So it was a little lower, but we're rounding it up just to give us a nice round number, easy to do some quick maths on. February, it was the January 31st to February 1st, all the way up here at around 4,000 points before the market just took off for those next couple of days. Then we had March, 3,900. We obviously had the banking crisis at 3,800, which I've called here as a missed opportunity. The prices are probably not going to go below 3,800 for the S&P. If they do, it would be a very quick wick and then closing above those levels. That was the March level here at around 39. And then May brings us to today at 41. You can see where the price is currently. So the total of this, 39,500, the average, because there was 10 opportunities here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, is 3,950. Today's price, 4,100. It's a profit of about 3.8%. Meanwhile, this has been one of the most fearful times that we can recall going all the way back to the pandemic in 2020. So this was one of the most fearful, well, the most fearful time. We've had a very fearful time at the moment, but there are still profits to be made. And listening to the noise, the news, will always keep people poor and just forget the past. So by no means is this some sort of trading plan, but it's just something interesting that I found by having a look at these particular dates and seeing how bad the fear was of last year, if there was any way to make money from these particular dates. And from the data, you can see that there was a small profit here, 3.8%, just buying on some really basic news. So how does this look for BTC? Well, this one's also quite interesting as well. Going back to the dates here in March and then May and so forth, you can see each of the periods, you can start to see a pretty good pattern where there was a lot of lows forming. And the idea around looking at the interest rates and how the news had told us and what the mainstream belief is with retail investors, where they say that the markets have to fall after this point, that there is still more to come. You can really start to see that a lot of it is probably already priced in after the first couple of rate announcements. So we had the March, we had the May. By the time we got to June, it was all over. The rest of it has been priced in. And some may say I'm calling this prematurely because we haven't pushed up far enough. That is a fair judgment as well. But from the analysis I've done and many others have, and the hours and hours of content here on the channel, I'm more than likely sure that this is the low and that this banking crisis low will not get taken out as well. So we can look back to the S&P just briefly, where you can see the interest rate announcements and where they came out in the market. Basically, once the market got to June with that third interest rate increase, it was all over. The rest of them have basically been priced in. We have gone up every single time since June. The Fed in June was at 1.75%. We are now at 5.25%. And the market is higher than where it was in June. Go figure. Now, you probably want to see what these numbers were for Bitcoin. They're even better than the S&P, but so they should be because Bitcoin moves more than the S&P. So we can see all the prices here rounded up more or less through the purchasing times of the interest rate announcements. Total here, 257,000. Of course, that's if you're buying one Bitcoin every time. If you don't, you buy a tenth, whatever. Do the maths, right? The average is now 25,700 per BTC. Today, it's 29,000. You see it right there, 29,099. So the profit is 8.8%. Sure, we could have made 100% from the low to the high, but remember what happened at the lows. A lot of people gave me a ton of hate for this particular post, looking at the low probably being in. Then they give a lot more hate for missing any sort of opportunity under 22 because they believed it was going to go to 12 or 10 or $3,000. Not going to happen. Underneath 19.5, most likely not going to happen either. So any sort of moves under these levels, I think are going to be great opportunities, but I think overall they're probably missed opportunities. You can see just from these news items that come out have been a good time just to be buying on those dips. Not saying it's a plan overall, but it's just an interesting way to have a look at the market, especially when the news and the noise is telling us that we should have further collapses. So how do we make money from these markets? Well, we're in the first stage of a bull market. This is not a bull market that is going to go to new all-time highs next week, like what we saw in late 2020 and 2021. It's the first stage of a bull market that needs to swing between the bulls and the bears a little more until the bears get destroyed. And then they have to flip bullish. You can see a lot of the bears really trying to hang on to their narrative and just pulling at any sort of strings. And so what happens in the psychology of the dumb money, the retail, these are the terminology used in the industry. I know some people don't like the term dumb money, so be it. What happens is market is too high. You get this idea that the market's going up too much. Then it gets a correction, a good time to buy, if you understand what stage of the cycle you're in. And it's saying, and most people say market is going lower. So in no way am I saying buy now at 29K, it's never going to go lower. That's absolute nonsense. But in any of these major dips, not just daily dips, but the major dips where we can see them come in on support, the dumb money always says the market is going lower and they wait and wait and wait. And so even if they bought it 28 and it dropped to 27, they would shoot themselves thinking, I could have waited and bought lower. That is a fool's game and you're always going to lose doing that. So then they wait for the pullback. The market starts to move up. That's what happens next. We get that push up. The market continues to climb, which is what we see on the SP 500. So you can see in each of these occasions, market's gone up and then it pulls back and they say it's going to go lower, but it doesn't. Market pushes up. Again, it's going to go lower because of the banking crisis, because there's more banks going to collapse. And this means we should go lower over the long term. And then it goes up again and they say, well, interest rates are going up. This can't last much longer. It doesn't go lower. Then they say there's going to be a Fed pivot and then something always breaks and it should go lower. It's the same thing over and over again. So the market goes too high, it repeats, waiting until things settle down. You know, the mindset changes and they wait and wait and wait. Market's going lower, wait until things settle down, waiting on the pullback, market's too high. And so this is how the bears get crushed. That's exactly how the psychology happens. So if you feel yourself in this situation, get a trading book out, get some sort of journal and write down your thoughts every single day. This is not the sexiest video to be making, telling you that Bitcoin's going to go up to new all-time highs or that it has to collapse and this is the best time to be buying, but it will make you feel the best being in control of your finances. So hopefully that has given you a little more than the typical video that tells you bull only or bear only, put you in control, which is exactly what we do at the Investor Accelerator. It puts our traders and investors in control of their own money and doesn't allow the noise to affect them. That is the biggest part of trading and investing. Of course, having your own plan, but the trading psychology comes into it more so than anything else. Check out the link in the top of the video description, like and subscribe, share this with a friend who might be going through some sort of painful experience in the market, help them out. And once you've shared it with a friend, check out our channel sponsors, Bitget and ByBit, big USD sign-up bonuses with no trading required, but they also have other big sign-up bonuses with trading required as well. SwiftX also has $20 of free BTC going on. Link is down there. So I'll see you guys at the next video. So glad that you got something from that. Let me know in the comment section what you found most valuable. I'd love to put more of these sort of trading tips in the videos as well. Until next time, take care and peace out.